The following individual is not an attorney, but rather a paid spokesperson for the law firm of Oakes Fosher. These videos are made to assist investors who believe they've been a victim of securities broker fraud or negligence to recognize if any misdeeds have taken place. Oakes Fosher dedicates its entire legal practice to helping investors all across the nation. We work on a contingency basis, which means there are no fees charged unless we collect for you. The choice of an attorney is a difficult one and should not be made solely on advertisements. At Oakes Fosher, we invite you to research our experience, our reviews, and our Better Business Bureau A+ rating as part of your due diligence when choosing an attorney to represent your interests.
One of the most important factors that determines how an individual chooses to invest is that of liquidity. Put simply, liquidity means having ready access to money that can actually be spent. An individual's liquid assets could include both funds held in bank accounts and securities purchased from public securities exchanges. This is because investors have a guaranteed redemption that gives them the ability to sell their shares in a publicly traded security at a moment's notice. However, this is not the case with all types of investments. There are alternative types of investments that are not sold on any public securities exchanges, which means they lack the guaranteed redemption that comes with publicly traded securities. This makes it incredibly difficult for those in alternative investments to liquidate their assets. Alternative investments are investment pools designed to do things like fund real estate projects, provide private mortgages, purchase interest in startup companies, and more. It is often very difficult for those managing these investments to predict how much capital is actually required to fund operations. Many of these companies begin with an amount of capital substantially less than what is required to achieve their goals. This fact alone makes these types of investments risky because there's a greater chance that the company will fail. The reason that these products are so illiquid is because those who manage these funds want to hang on to cash infused for as long as possible. Because of this, they often have a very frustrating liquidation process that is designed to deter investors from liquidating their shares. For example, this can include scheduled buyouts on a quarterly or yearly basis with only a finite amount of buyouts actually being offered. This is on top of the fact that investors are very rarely offered the amount they are told their shares are valued at. This makes these alternative investments especially unsuitable for people who may need to liquidate assets at any point over the life of their investment. Even though these private investments are not suitable for most individuals, they continue to be pushed onto casual investors due to the amount of commissions received by the recommending brokers. Many unethical securities brokers take advantage of how poorly these products are regulated in order to misrepresent what they actually are to unsuspecting investors. Many times they will pitch these investments as the next big thing, something that investors will kick themselves for missing out on. Unfortunately, many brokers only recommend these products because of the incredibly high commissions they receive that are sometimes as high as 10%. Compounded with other upfront fees, this can drain an investor's principal investment of as much as 17% before the money is even put to work in the product. Private investments that are not registered with the Securities and Exchange Commission are known as private placements. Since these companies do not wish to register with the SEC, they are required to adhere to strict guidelines regarding types of investors who can buy the product. Securities brokers can only recommend private placements to what are known as accredited investors. An accredited investor is an individual with either a minimum net worth of $1 million, excluding their primary residence, or a minimum annual net income of $200,000. This number jumps to $300,000 for a joint income. If a broker has recommended a private placement to an investor who does not qualify as accredited, then the broker has violated the terms of the investment's exemption. Many of these alternative investments are actually registered with the Securities and Exchange Commission. However, this does not mean much regarding how well they are monitored by regulatory authorities like the SEC and FINRA. They can still cause significant financial harm to investors due to their private nature. There are several different kinds of alternative investments, both registered and unregistered. These include non-traded real estate investment trusts, or REITs, non-traded business development companies, or BDCs, oil and gas limited partnerships, equipment leasing funds, and more. The significant majority of these products are not suitable for investors due to their associated risk, illiquidity, and extremely high cost structure. However, brokers continue to push them onto unsuspecting investors because of the excessively high commissions they receive when the transactions are executed. Oakes Fosher dedicates its entire legal practice to helping investors across the nation. If you believe that your securities broker placed you in a highly unsuitable alternative investment, please contact Oakes Fosher today, as you may be entitled to damages.